Hey everybody, checking in with you. How's everything going? Not much to talk about really with respect to the market. We see stocks down a little bit today. Obviously, yesterday we had that big, huge, gigantic rally. Great Trump speech. Great Trump speech. I love the wording. So we got to see. A couple of things to pay attention to. Number one, I spoke earlier about the sell-off in gold. Totally expected. We saw in the last week a 25,000 build in open interest in gold futures. And that, I'm assuming, was some new net long positions on the part of speculators. So, they waited and waited and waited, and then they jumped in that price level from, what was it, 1236 up to 1263. So these guys were late to the party. You should have been buying at the Fed rate hike like I told you to do. These guys came in late, so it made the market a little bit long. And then suddenly we got this big surge in probability for a rate hike in March. If you look at the CME's FedWatch tool, that thing went from 34% probability for a rate hike in March up to, I think somebody told me today, it's 80%. So, and Yellen and her crew there, they like to follow the markets, as stupid as that is. I mean, you think about it, that would be like Rockefeller back in the day when he was the monopolist in oil, asking his little competitors, hey, what price should I make the oil? It's ridiculous. When you're the monopolist, you don't look at the market for direction. You do what you have to do and the market adjusts. But, look, it's the whole entire field of mainstream economics is permeated with these backward thinking, out of paradigm, people who just don't understand. We're not on a gold standard anymore. We're not on a fixed exchange rate system. I mean, it's just like, I get, it's tiring talking about it. It's tiring talking about it. And along those lines, by the way, I was watching last night a Fox News channel, the O'Reilly Factor. Most of you probably aware of that show. If you're outside the United States, I think, many countries have it. I don't know if you watch it, but O'Reilly had Lou+Dobbs. Lou+Dobbs here in the United States, he's a very famous business journalist. He's been around forever. He used to be on CNN. He's been with Fox Business. Well, I don't even know if anyone watches Fox Business, but he's on Fox Business. Gets paid a lot of money, millions of dollars, all right? Lou+Dobbs, big name in financial journalism, been around forever. So O'Reilly had him on. And, they start talking about the debt, and I'm already thinking, here we go. All right, what's this, what's this clown show going to be? And sure enough, so O'Reilly says, what's going to happen? The debt's $20 trillion. It's $20 trillion. One day it's just going to have to be a disaster. One day. Meanwhile, they don't understand it. There's no debt. It's a stock of treasuries. Treasuries are dollars with a term and a coupon. Treasuries were bought, the $20 trillion in treasuries were bought by $20 trillion, and that $20 trillion is the net amount of government spending minus the amount of taxes taken away over the last 227 years, since 1789, right? So $20 trillion of dollars owned by the non-government throughout the world. They just hold the dollars in a treasury, which is like a savings account. They get a little interest. If they want the dollar back, they sell the treasury out. The Fed takes the treasury, debits the securities account, it credits a reserve account, and the guy's got money in his bank account. That's how it works. I mean, that's why nothing ever happened. It went from $800 billion in 1980 with Reagan, then it went to trillion, 2 trillion, 5 trillion, 10 trillion, 15 trillion, 20 trillion. Nothing happened. So anyway, and that's why nothing happened, because there's not a debt. If it was a real debt, believe me, something would have happened. You would have had hyperinflation or a collapse or something. Interest rates would skyrocket. Nothing happened because it's not a debt. Nothing happened. All right. As a matter of fact, all the opposite things happened, which is what I'm going to talk about. So O'Reilly says, "What, Lou, what's going to happen? Eventually, something's got to happen." And Lou says, this is Lou, guy getting paid millions of dollars, top journalist in finance. He says, what's going to happen? That eventually it's going to, what happens when the debt goes up is inflation goes up. And there you have it. I tweeted out a chart to Lou. You get the chart right from the Fed there. You go to that St. Louis Fred database, and I've put this chart up many times. You got the debt going up exponential and the inflation going down at the same time. The debt going up exponential and the inflation going down. It's right there. Like, the data is right there. The facts are right there. The evidence is right there. The proof is right there. They just it's not even that they're clueless. I think they think like they're above having to really know anything. And, if they speak in a very authoritative way, people are just going to believe what they say. Bill, when the debt goes up, it drives inflation higher and higher. And there's the evidence right there. And it doesn't happen. It's like the same thing with the interest rates when the idiots say that. What happens is when the debt goes up, the interest rates skyrocket. And meanwhile, in 1980, when the debt was $800 billion, the rates were 20%. And now the debt is $20 trillion. And the rate is what? 0.75% on the Fed funds? I mean, they're like thinking, should we even raise it to 1%? Ooh. There it is, right in front of everybody's face, right? But they keep on saying it. They keep on saying it. And I'm not talking about idiots and clueless morons like Schiff. I'm talking about people who are like, they have positions in society. They have positions in journalism. They have positions in economics. Look at this idiot, David Stockman, right, who was Reagan's budget director, who, rightly so, a great move when Reagan kicked the guy out on his ass because he's clueless. And if you go to my blog, Mike Norman Economics, if you just type into the little search box David Stockman, you'll see read about the encounters I had with that guy when I worked at Fox News. It's really hilarious. Go check it out. I'm telling you, it's good reading. Anyway, when the debt goes up, it drives inflation high. And there it is. You got the debt going like this. You got inflation going like that. Same thing. When the debt goes up, the interest rates go higher. And then you got the debt going like this and you got the interest rates going like that. It's like unbelievable. And now you got guys at the Fed saying that. And they're the ones putting the data out that shows the exact opposite. It's an amazing thing. It's an amazing thing. It's cognitive dissonance. It's like when something goes against somebody's beliefs, they will just ignore the facts and ignore the evidence and ignore the reality. Or they'll say, that stuff is wrong. It's wrong, even though it's absolutely right. It could be pure science. It's like these deniers of climate change. It's not it's wrong. It's like this mountain of scientific evidence that shows it's happening. No. They'll just deride the scientists and say they're all, they're crazy. They're wacko. They don't know what they're talking about. And meanwhile, every year, the temperature goes up and up and up. We see the sea levels going up. We see the ice caps melting. You see all the evidence all around. It's not happening. It's not happening. So it was just, every time I see that now, it's like a mixture. I get a mixture of emotions like frustration and anger and then just kind of like almost comic relief. Like, what are you going to do? What are you going to do? You just got to make money. If you make money, you're going to be okay. If you follow me, you're going to make money. All right. Bye.